Thank you very much, Victor, and congratulations and kudos to Dirk for the excellent and insightful presentation. So, briefly, I know he's touched on a number of the issues as far as DFIs are concerned, but we know, basically that they are financial institutions or development agencies which are involved in providing funds for startups or development projects in areas in which traditional financial institutions may want to shy away from. And they include multilateral DFIs, regional DFIs, bilateral DFIs, and of course, national development banks. Now, I expect that these different types of DFIs complement each other to be able to provide finance to support private sector development and sustainable growth in general. With respect to national development banks, we believe that there are any type of financial institution that the national government has full or partial ownership. And that's a very important point we need to make. And the World Bank actually put a cap at 30%, a minimum of 30% government ownership to qualify that as a national development bank. And of course, they have a legal mandate to reach to achieve socioeconomic goals in a particular region, sector, or markets. In terms of the need to establish DFI, Dirk actually indicated and explained that thoroughly. But we can look at the theoretical perspective in terms of the theory of market failure, the fact that markets are imperfect and there's a need for DFIs. And the other important, if you like, theoretical stand is providing, or if you are like having a complementary theoretical perspective, the fact that they provide a complementary role to, if you like, traditional financial institutions. Another important need for DFI is the fact that they are expected to provide counter-cyclical private financing and also to leverage private capital. And we see that most of them have become so active around this time during this pandemic. And also another important point is the need for funds to finance the SDGs. I know in terms of their contributions that have been discussed thoroughly, also their funding, Andrew mentioned that. One area we need to focus attention on is the business model that national development banks, for instance, use. They use retail lending model, wholesale lending model, or a combination of both. They use loan guarantees and insurance, and also providing technical assistance. Quickly, in terms of research agenda, I think that the business models is one area that research needs to focus on. What type of models will be suitable for particular types of national development bank? Ghana recently set up a new national development bank. And there's a whole discussion regarding the model that is being used. And some of us are asking the question, what type of research went into arriving at that decision? We know both models have their pros and cons, but which one will really serve your purpose? Another area we can look at in terms of research is the role that DFIs are supposed to play in terms of financial sector development during a pandemic and post-pandemic. And then also, of course, I mentioned the complementary role that they are supposed to play, and that's an area that research needs to continue. And again, what type of regulatory framework is appropriate for national development bank? Other models who have it that they are self-regulated. The Uganda Development Bank, for instance, is self-regulated. The new development bank in Ghana is called the Development Bank Ghana, and it's supposed to be regulated by the central bank. And so you're asking, should they be self-regulated? Will the Basel III framework be appropriate for national development bank? These are areas that we need to questions that we need to really answer. Then the role of national development banks in climate finance, and also in infrastructure development, and also promoting sustainable development. I know Grace discussed the issue of impact evaluation. It's extremely important. Development banks are supposed to achieve certain development outcomes. And so when you provide the funding, how do we measure or ascertain whether the impact has really been made? We need to look at the project, evaluate the project, and ascertain whether the objectives have been achieved. After interacting with a few of them, and I don't see that to be a major focus. I remember when I was a PhD student in Stellenbosch, my PhD student, Professor Nicolas Dirk, we were bring projects from the Development Bank of Southern Africa, and our work is just to assess and evaluate the projects to ascertain whether the objectives for providing the funding have been achieved. Another important area, and lastly, to make that point, is what kind of governance structures or framework do you implement for National Development Bank? Political influence is so crucial. We're talking about government ownership. So would government allow for, if you like, an independent appointment process to be instituted in selecting board members? I was in Rwanda. The Rwanda Development Bank, for instance, has a board chair, though appointed by the president, is expected to be an independent board member. And I'm told that he came with his own terms, that if he's going to do this work, these things must be in place. It doesn't want change of government, meaning you change the board chair. So we need to be very clear on what structures we put in place to make sure that these institutions have right and proper governance structures so they can operate and function accordingly. Thank you very much.